Good morning to every one of you. Today's topic is subsidiary book. Subsidiary book is the subdivision of the journal. Because the journal contains lot of transactions. Some transactions are repeated many times, particularly sales, purchases. More transactions are recorded some particular accounts only, but whereas some accounts rarely occur. For example, sales is taking place many times. You take, for example, a tea shop. In a tea shop also, there would be, in 1 hour itself, there will be at least 100 transactions. Sales may be taking place. Per day, you just count that 100 into 10 times, that means 1000 transactions. Whereas in big company, just to think of that, minimum 1000, 10,000 transactions related to sales itself might have been taken place. Like that, purchases also are repeating many times. Whereas some transactions are not like that because the interest received. Because once in a year, interest is received. Many sources may be. Some 7 sources means 7 times you have received in a year. And also rent paid only 12 times. Electricity paid only 6 times. Telephone charges paid 12 times only. But sales means in a year we find lakhs of transactions. Thereby a need for subdivision of the journal in a sense that those accounts which are recording many transactions should be taken separately. Instead of writing in double entry, we have to write, instead of directly posting to the ledger, it should be taken into the subsidiary book. Hence there are 6 subsidiary books. One is sales book, another one is purchase book, third one is sales return, fourth one is purchase return, then bills receivable book, bills payable book, and finally cash book. So ultimately 7 books are there. 7 subsidiary books are there. Let us see one by one. First one is sales book. Sales book containing a column that is that particular column mention the name of the person who bought. This is sales book is related to only the credit item. Sales means this is only credit item, not cash item is to be recorded here in the subsidiary book of sales. Thereby there is column for the ledger value, then amount columns here. Then sales for credit sales happened in a day, say 270 transactions means that would be recorded in 1 by 1 by putting the date. And then that means sales to X, sales to Y, sales to Z, sales to X are repeated. So maybe repeated many times. The same customer might have bought many times. That would be recorded. Thereby, all that X will be coming, X or Y should be coming there, and at the month end, how much credit sales took place would be taken into account. Credit sales only to be recorded here. And in a year, how much credit sales recorded. That would be maybe called as credit sales, and separately you can find collection, the X account, Y account is a personal account, you have to write separately, and thereby when they are paying the cash, accordingly that would be recorded. Then like that purchase book. We are making purchases from different parties. So in a year, so many times we are making purchase. Thereby, you can able to find out the total credit purchase in a year by this way of writing this X, Y, Z like that. Purchase and total purchase, credit purchase can be known by totaling that credit. Monthly you can make total, or daily you can make total, and take it to the balance carry forward. Like that, finally one can make the total of the purchase. Thereby purchase book will be showing the total credit purchases.